Have you ever felt like no matter how hard you try, the market always seems to outsmart you? You jump in when everyone is euphoric, convinced that prices will keep climbing, only to realize too late that you've bought at the peak. Then, when fear grips the market and prices plummet, you panic, selling at a loss, only to watch the market recover right after you've exited. It's frustrating, it's exhausting, and worst of all, it makes you feel powerless. But here's the truth, it's not bad luck, and it's not because you lack intelligence. The market isn't out to get you. The real reason so many investors fall into this trap is because emotions, fear, greed, hope, and panic take control of their decisions. You see an asset skyrocketing, and FOMO, the fear of missing out, pushes you to buy, even when logic tells you it might be too late. Then, when the inevitable downturn comes, the fear of losing everything makes you abandon your plan, selling at the worst possible moment. It's a vicious cycle, one that repeats itself over and over again, draining your capital and your confidence. But what if you could break free from this pattern? What if, instead of reacting emotionally, you could approach every investment with clarity, confidence, and discipline? Imagine making decisions not based on fear or excitement, but on a solid strategy that allows you to stay calm no matter what the market does. This is what separates successful investors from those who constantly struggle. And today we're going to show you how to take control, how to master your emotions and turn them from your greatest enemy into your greatest asset. Every investor enters the market with one goal in mind: to make money. Yet, paradoxically, the very emotions tied to that goal, fear and greed, are often the reason they fail. The market doesn't just test your financial knowledge, it tests your emotional resilience. And for most people, emotions win. When prices surge, excitement takes over. You see others making money, and FOMO, the fear of missing out, whispers in your ear, urging you to buy, even if the price has already skyrocketed. You convince yourself that this time is different, that the trend will continue, and that you don't want to be left behind. Then, reality strikes. The market corrects, and the euphoria turns into anxiety. As prices drop further, fear takes the wheel. You watch your portfolio shrink and panic sets in. What if it keeps falling? What if you lose everything? In desperation, you sell, locking in losses, only for the market to rebound right after. This cycle of emotional investing repeats itself again and again. You enter at the wrong time, exit at the worst time, and despite your best efforts, your account balance suffers. It's not that you lack intelligence or strategy, it's that emotions overpower logic. Until you learn to control them, the market will always have the upper hand. The stock market isn't just a game of numbers, it's a battlefield of emotions. And the harsh reality is that most investors don't lose money because of a lack of knowledge. They lose because they fall into psychological traps that cloud their judgment. The market is ruthless, preying on human emotions, and unless you recognize these mental pitfalls, you'll keep making the same costly mistakes over and over again. One of the most dangerous traps is FOMO, fear of missing out. You see an asset soaring, social media is buzzing with success stories, and suddenly you feel the urge to buy in, convinced that you're missing out on easy money. But by the time you act, the price is already inflated and the market is preparing for a pullback. Instead of profits, you're left holding the bag. Then there's herd mentality. You follow the crowd because it feels safe. When everyone is buying, you buy. When panic spreads, you rush to sell. But the truth is, by the time the crowd reacts, the smart money has already made their move in the opposite direction. Another common trap is confirmation bias. Once you've made an investment decision, you only seek out information that supports your choice, ignoring warning signs and opposing viewpoints. You convince yourself that your position is solid, even when reality says otherwise. And perhaps the most damaging of all is loss aversion. Studies show that people fear losing money more than they enjoy making it. That's why so many investors hold on to losing trades for too long, refusing to cut losses while selling winning trades too early just to lock in small gains. Instead of playing to win, they play not to lose, crippling their long-term potential. These psychological traps are what separate struggling investors from the ones who thrive. If you don't learn to control your emotions, the market will control you. The market will always be unpredictable, but how you react to it determines whether you succeed or fail. Controlling your emotions in investing isn't easy. It takes discipline, self awareness, and a solid strategy. However, the good news is that emotional mastery can be learned. The best investors aren't immune to fear or greed. They've simply developed habits that prevent these emotions from dictating their decisions. Here's how you can do the same. First, establish a clear set of trading rules and stick to them. Before entering any trade, define your entry, exit, and risk tolerance. Never invest based on gut feelings or emotions. A well thought out plan removes impulsive decision making and keeps you on track, even when the market gets volatile. Second, separate your emotions from your investments. This means detaching yourself from short term market fluctuations. Don't chase profits out of greed or sell out of fear. Treat investing like a business, not a roller coaster ride driven by adrenaline. Next, always have an exit plan. Before you place a trade, know exactly when you'll take profits and when you'll cut losses. Setting stop losses and target prices in advance prevents you from making irrational decisions in the heat of the moment. Finally, track your emotions through a trading journal. After every trade, write down why you made the decision, what you were feeling at the time, and what you learned. Over time, patterns will emerge, allowing you to identify emotional triggers and improve your decision-making process. Mastering your emotions doesn't mean eliminating them. It means learning how to manage them effectively. By applying these principles, you'll start investing with clarity, confidence, and control, turning the market's volatility into an opportunity rather than a source of stress. Successful investors don't just have deep financial knowledge, they have complete mastery over their emotions. Icons like Warren Buffett, Ray Dalio, and Charlie Munger don't panic during downturns or chase hype during bull runs. They understand one fundamental truth: the market moves in cycles, but those who stay disciplined always come out ahead. The first lesson they follow is that nothing goes up forever and nothing crashes indefinitely. They don't get carried away by euphoria when prices surge, nor do they surrender to fear when the market collapses. Instead, they recognize patterns, understand market psychology, and position themselves accordingly. Second, they know that wealth isn't built overnight. Impatient investors seek quick profits and end up making impulsive decisions. But the greatest fortunes in investing come from long-term thinking, patience, and the power of compounding. Buffett, for example, didn't become one of the richest men in the world by flipping stocks. He let time do the heavy lifting, allowing his investments to grow exponentially. Finally, the best investors only act when the right opportunity presents itself. They don't follow trends or buy simply because everyone else is doing it. Instead, they wait for moments of true value, when fear has driven prices lower than they should be, or when a company's fundamentals are strong but the market has overlooked it. In other words, they act based on logic and strategy, not emotion and hype. This is what separates them from the average investor. They don't react to the market, they anticipate it. They don't chase every wave, they position themselves before the tide turns. And most importantly, they don't let emotions dictate their decisions. They let wisdom, patience, and strategy guide them to success. To succeed in investing, you must shift your mindset from emotional reactions to strategic thinking. The market is unpredictable, and no trade is ever guaranteed to win. That's why professional investors don't rely on hope or gut feelings. They approach every decision with logic, discipline, and a structured game plan. The first step to thinking like a pro is adopting a probability-based mindset. No investment is a sure bet. Instead of obsessing over individual trades, think in terms of risk-to-reward ratios and probabilities. The goal isn't to win every time. It's to consistently make decisions where the odds are in your favor over the long run. Next, risk management must come before profit seeking. Many retail investors chase big gains, but ignore the most important rule: protecting your capital. Professional investors focus on preserving their money first and growing it second. They use stop losses, diversify their portfolios, and never risk more than they can afford to lose on a single trade. Because in investing, staying in the game is more important than scoring big on any one bet. Finally, develop a long-term perspective. The market is filled with short-term noise, daily price swings, hype cycles, and media panic. Amateurs get caught up in the moment, making impulsive decisions based on fear and excitement. Professionals, on the other hand, stick to their strategy, ignore short term volatility, and focus on the bigger picture. When you stop reacting emotionally and start thinking strategically, everything changes. You no longer fear market dips, you see them as opportunities. You don't chase trends, you wait for setups that fit your plan. And most importantly, you become the kind of investor who doesn't just survive in the market, but thrives in it. Imagine placing a trade with total clarity, no panic, no hesitation, no emotional swings. You see the market drop, but instead of fear gripping you, you stay calm, knowing that downturns are part of the game. You see an asset skyrocketing, but instead of rushing in blindly, you analyze the situation logically, refusing to let FOMO dictate your actions. This is what it feels like to be in control, to be the kind of investor who doesn't react to the market, but moves with intention and precision. When you master your emotions, you stop making impulsive mistakes. You no longer buy at the peak because of hype or sell at the bottom out of fear. Instead, you make decisions based on strategy, risk management, and probabilities. Your portfolio becomes more stable, your losses become smaller, and your gains become more consistent. But the greatest reward isn't just financial, it's peace of mind. You no longer feel stressed every time the market moves against you. You no longer lose sleep over your trades. You build the confidence to withstand market fluctuations, knowing that as long as you stick to your plan, success is inevitable. In the end, investing isn't about how much money you make in a single trade. It's about how long you can stay in the game. The market rewards those who can endure, those who remain disciplined, and those who don't let emotions control them. If you can master your mindset, you can master the market, and that is the real key to long-term wealth. In the market, there are only two types of players: the hunters and the hunted. If you let emotions dictate your decisions, you become easy prey for the seasoned professionals who thrive on fear-driven selling and greed-fueled buying. Every time you panic sell, someone else is buying at a discount. Every time you FOMO into a rally, someone smarter is cashing out their profits. The market isn't designed to be fair. It rewards those who stay disciplined, think strategically, and control their emotions. So the question is, will you continue being a victim of emotional investing, or will you take control and start thinking like a winner? The choice is yours. Master your mindset, develop a strong strategy, and commit to long-term success. The sooner you start, the sooner you can transform from a struggling trader into a confident, profitable investor. At Value Gold, we're here to help you navigate this journey. Our mission is to give you the tools, strategies, and psychological insights needed to succeed in the market. Subscribe now and take the first step toward investing with clarity, confidence, and control. Because in this game, knowledge is power, and those who master it are the ones who win. Are you ready to level up? Let's do this together.